Gold reached and briefly surpassed 4,000 US dollars an ounce, and it's now traded from the $2,000 levels just 2 years ago, with returns that are now outstripping those for equities this century. Gold has jumped more than 50% this year. This new record is both a market milestone and a signal of deeper macro-political stress, and importantly reflects a broad flight to safe assets amid current geopolitical shocks, policy uncertainty, and weaker dollar momentum. Now we can sheet the melt up to that range of factors. The geopolitical and political shocks have increased risk aversion and safe haven demand for gold, including crises in major economies and sustained global tensions. We'd include here the US government shutdown and fiscal gridlock, trade war, which have escalated under President Donald Trump, especially tariff-related inflation concerns, and the political instability, including crises in France and Japan. And we'd also add in AI-driven tech stock bubble fears, with 35% of S&P 500 firms trading at over 10 times sales. And we've seen large-scale central banks reserves diversify away from US treasuries, and that's supported persistent physical buying by sovereign buyers, notably from the People Bank of China and Russia. It's a shift away from fiat currencies, and central banks and sovereign funds are diversifying reserves, and by the way, are therefore not that price sensitive. The pace of buying doubled after the US and its allies froze Russian foreign exchange reserves in 2022, following the full-scale invasion of Ukraine. In addition, there are renewed expectations of the US Federal Reserve rate cutting, which reduces real yields and so improves gold's relative appeal as a non-yielding store of value. And a weakening US dollar this year has amplified dollar price gold gains and encouraged overseas demand. So the surge past 4,000 US per ounce for the first time in history is driven by those geopolitical and economic anxieties and a growing loss of faith in traditional financial systems. Analysts expect further upside, but also warn of volatility. While central banks were in earlier, now other investors' behavior shows a shift towards conviction-based gold holdings with a mix of physical, bullion, ETFs, and options.